Did you know that starting to invest at 18 gives you a massive advantage over most people? With the power of compound interest, even small investments can grow into something significant over time. So, imagine investing just 50 euros a month. By the time you're 40, you could have thousands or even hundreds of thousands depending on your strategy. Well, in this episode, we will break down exactly how you can build your first portfolio as a young investor. I will also share an inspiring example of someone who really started early and achieved incredible success. So, if you think investing is only for people with lots of money or years of experiences, you should really think again. Because this episode will really prove that starting small and young is the key to financial freedom. So, let's dive in. So, why should you start investing at 18 years old? That's the first question. So, starting early really gives you time to take advantage of compound interest, where the money you invest earns returns and those returns start earning their own returns. Sounds complicated, but it isn't. So, for example, if you invest 1,000 euros at 18 with an annual return of 8%, without doing anything else, it will grow to over 10,000 euros by the time you're just 40. You did nothing, you just invested 1,000, that's it. But think about it. If you, for example, invest 1,000 into this action and then 1,000 into another action, think about it. You can make so much money. And that is really just without adding anything extra. So when you start young, you can also afford to take bigger risks because you have decades ahead to recover from any potential losses, and that is interesting. Plus, you're also building habits that will serve you for a lifetime, like budgeting, saving, and understanding the value of patience. And we will talk about that a lot more. Be ready. So first thing first, we'll talk about how to build your portfolio step by step. It's really easy. So the first one is really to set your goals, because you should really think about what you want to invest. Are you saving for something short-term, like a car or vacation? Or are you more focused on long-term goals like buying a house or achieving financial independence? For me, it's more about achieving, let's say, financial independence, but also living my life and being free. This is my goal. So you really need to basically set the type of investments and also the goal you need. Because if you, for example, choose a certain goal, your investments will be, your strategy investment will be a bit more different. For example, my goal is to basically achieve freedom by the age of 21, but I don't have a lot of time. So you're like, but wasn't it about like a long-term goal? And yes, it is. But what I want to explain to you is that you have different, let's say, type of investment strategy. You have really the very long term. You have also like 10 years or 5 years. 3 years is really the minimum, I could say, for the long-term investments. So you really have so many different things, so many different strategies, and that's why it's really important to first set your goals, and then we will see other things you also need to consider before creating your portfolio. So something we also need to consider is at 18, you have basically time on your side. So you can take on slightly riskier investments like stocks or ETFs, which is my favorite things. However, if you're uncomfortable with too much risk, which is also understandable because you are just starting, you can mix in safer options like bonds or even savings account. The key is really to find a balance that works for you, not for something else, someone else, for you, because there's so many different kinds of people and it really depends on your education. For example, in my education, it was always, oh, you need to save your money and stuff like that. And since I was 13, 14, I started to put all my money that I gain every single month from my parents, I started to put it aside. But I didn't have an account, I didn't have nothing, so I just had the money, that's it. But then, at the age of 14, 15, I asked my mother to have a bank account because it was a lot more easier for me to buy things and stuff. And then, since the last few years, I also asked my mother to have a other account to basically put my money and then to have an interest every single year. So here in Luxembourg, really depends where you are, but in Luxembourg, it's 4% when you're under 18, which is really interesting. But I want you to really understand that 4% is good for a bank. But when I'm talking about other things, other opportunities, it's a lot more interesting when you're in the investment world. So, for example, let's take, I would say a ETF or stock or even bonds. I don't care. Just we'll take something an action, sorry. So, if we take this, usually you can have a interest over 8% or 10%. Really depends what you're choosing. But having an 8% revenue every single year is a lot more interesting than having a 4%. So let's say you are choosing a compound interest, which means that every single year by a company, the company will basically take your money, borrow your money, and then they will invest in other things in the company, okay? Think about this. And then the thing is that even if their company drops down or goes up, because it's the law, you will always gain, for example, a 8% revenue every single year. Always, even if they go down, because this is their problem. But if for example, their company goes up and can gain a lot more money because they have your money, so with your money, they can basically invest in other things. Well, they will gain a lot more money, but your interest, your compound interest will always stay the same. It will always be 8%. So, what is interesting in this is the fact that even if it goes down or up, it's a lot more safer if you don't want to risk your money. But if you want to risk a bit your money, because sometimes, I'm not gonna lie, it's a lot more interesting and a lot more fun. But it's different for everyone. My mother, for example, doesn't like that. My father doesn't like that. For example, what I do is that I invest my money in so many different things, in so many different stocks, ETFs, compound interest, and stuff like that. I really am diversifying your portfolio, and that is the next point. So, you shouldn't put all your money into one stock or asset. This 99% people, entrepreneurs, will tell you the same thing. Sorry, I meant investors, not entrepreneurs, whatever. Instead of spreading your investments across different sectors, industries, and asset types. So, for example, stocks. You need to invest in individual companies you believe in, like technology, or even green energy firms, so many things like that. For example, Tesla. Then we have ETFs, a great way to own a mix of stocks without having to pick individual companies. They're lower risk and perfect for beginners. For example, the SP 500, which is pretty interesting. And then we have bonds. These are lower risk investments that provide steady returns, which is more interesting if you don't want to basically risk all your money, which is also understandable, like we talked about. How to start investing with limited money. You don't need thousands of euros to begin, because many platforms allow you to start investing with as little of 10 euros or 20 euros. We have, like, for example, Trading 212, Degiro, or even eToro make it so easy for beginners to get started. I am using, for example, Trading 212, and I also used eToro last year. It's interesting, but it really depends on you, which one you like, which advantages you want to have, really. So, for example, if you invest 50 euros a month into a SP 500 ETF, which tracks the top 500 companies, the best companies in the US, you will likely see steady growth over time. It's a simple, low-risk way to grow your money while you learn about investing. Because when you will learn about investing and how it really works, this is so cool. You know why? Because you're going also to have a bigger network, and that is always the most interesting thing, because you will also see other persons, see other, let's say, strategy of new investors and stuff, and you can learn so much about it. And also, the more and more you will get comfortable with a long investment, the more and more you will also be more comfortable about talking about like the short-term strategy. I also made another episode about short-term strategy and long-term strategy, which you can also see on my Spotify account or Apple podcast. Depends where you're listening my podcast. So Alex started investing at 18, which is 20 euros a week. They really didn't know much at first because they were friends, had like friends and stuff. And so they didn't really know much at first, so they basically started with ETFs, which are beginner friendly and lower risk. So over time, Alex learned more about the stock market, and he added individual stocks to the portfolio and stayed consistent. So by the time Alex turned 25, their portfolio had grown to 10,000 euros. Can you imagine? He did basically 20 euros every week and he made 10,000 euros without doing a lot. And you're like, yes, but he's also basically putting his money to the side. Yes, but those 20 euros, he didn't really need it. It's like, for example, me, I don't like the money I get from like my few revenues. I don't really use it to buy stuff or something like that. Most of my money, I have like this law, not law, but like this strategy for me to basically put my money aside and also to invest it, because that's how you can make money and be financial stable. But what I do is that I always have this 80%, 20%. Depends again if you're working, if you are a mom, if you are a dad, if you're a teenager. I take 80% of my money that I gain, and then those 80% I invest all my money. Every single thing. And then those last 20%, I take it to do whatever I want. Sometimes it can buy clothes. Sometimes it can, well, most of the time I use it to buy, for example, books, to buy also my material, because to do my podcast, I also need a new microphone. I need also a laptop. I need so many things, and that costs a lot of money. So that's what I do. But if you're, for example, a father or a mother, it doesn't really work like that. So you can do the opposite. You take 20% of your revenue and you can basically invest this money, and then 80% you use it again for, I don't know, you need to buy groceries, you need also to pay the rent, you need also to pay so many things. So that's what my mother, for example, does. It's what I told her to do because it's pretty interesting. You should really, let's say, find your strategy. Investing, it isn't about quick wins. It's about consistency. Here are some habits to develop and that I really suggest. So first thing first, you need to set up automatic transfers to your investment account every single month. Even if it's just 20 euros or 50 euros or even less, we don't care. The fact that you're doing it, this is the most important part. And then you should really educate yourself. Yes. Watch videos, read books, and also follow the podcast Algae Mindset to stay informed. But I also suggest you to not just listen to just my podcast, but also to listen to other podcasts or other videos you see on YouTube. I've been with people who have no clue about investments or trading, and they told me so many things that were so wrong. That's why it's really important. That's something I learned so much through all my years, to really do your own research, educate yourself. And again, if you have a question or you want to collaborate, anything else, just write to me. You can write to my Instagram. You can also write an email, whatever you want. There is also my email and my Instagram and TikTok account under my episode. So if you want to contact me, you're welcome also to contact me. And the third point I just wanted to talk about, which is also very important, is to stay calm during market drops, because it is completely normal for the market to go up and down. Really. So don't panic and sell during downtowns. This is when long-term investors see the most growth. And this is the most important point you need to really understand. Always stay calm. So starting to invest at 18 might seem intimidating, but it's simpler than you think. The key is to really start small, stay consistent, and always keep learning. Remember Alex's story. They started with just 20 euros a week, and now they're on track to achieve financial independence. That could be you. If you're ready to take control of your financial future, don't wait. The earlier you start, the bigger the rewards. Thank you for listening to Algae Mindset. Don't forget to share this episode with a friend who's thinking about investing, and let's build wealth together. This episode is also available on Spotify and Apple Music, so stay tuned for more episodes, and also feel free to reach out with your questions. Have a good day. It was Algae Mindset. Bye.